I just got assigned 300 shares of Tesla stock. Now, like most companies last week, they had a terrible time. But Tesla in particular released their quarterly deliveries report, and it was disappointing. They reached record highs, but they missed analyst expectation. What is even worse is that Elon and the whole Twitter deal and that saga has continued, and it looks like that Elon will end up buying Twitter. As a result, Tesla's stock price is down 10% in the last 5 days. Now, I could have avoided assignment if I was trading Tesla stock, but because I am trading for income, I had to accept the shares and start selling covered calls. So what we're going to do in this video is walk you through what happened with Tesla last week, what I've been doing with Meta as well, all that kind of good stuff. And all I ask for in return is that you smash that like button and don't forget to subscribe. So, despite being assigned, you can see here in week 11, so for last week, we made $885, which, is the highest I've made in the last 3 weeks. And that's primarily, again, down to Tesla. And now we're selling covered calls, which if you're brand new to that, I'll go into that in a second. If we have a look at where we are year to date, we are still 14% behind, just under $10,000. For those of you who have been continuing watching my channel will know that the goal is to make a minimum of $2,500. I know it's 4,000, but that's the average US income. And I'm currently $200-ish away from hitting that goal for this particular month, which is pretty good. So let's get into the meat of this and let's head over straight over to TradingView. As you can see here that Tesla absolutely tanked. As I mentioned, the disappointing delivery numbers, the Elon Musk and Twitter saga, as well as a better than expected jobs report, which will then mean that the Fed will not stop easing interest rate increase, therefore tank the whole market pretty much on the Friday. Therefore, I was left with the decision on whether or not to roll this option for another week or ended up with assignment. Now, I was thinking about this so my cost basis is 280, 250, and I could have rolled this. I could have rolled this and made like $60 and rolled down to a 282 strike, which if I was trading Tesla and you're trying to grow my portfolio, I probably would have done that. However, my mindset and my thought process is slightly different now because I am looking for income related growth. So I needed to bank that income and then generate more income this week. So what I've decided to do is sell a covered call against my 300 shares at $240 expiring this Friday, October 14th. Now, what that means is that I'm saying I'm willing to sell my 300 shares a strike price of $240. Now, obviously, I'm not going to let that happen unless I get earlier. If Tesla was to creep back up, which I think it might do, we are oversold now. Currently, I figure they're 26.78, as well as we do have this missed weekly pivot here. So I've strategically placed my strike above that weekly pivot so that I can hopefully get some sort of resistance at this so I can do a nice easy roll and go up to the 250 or something along those lines. So that's my thought process in terms of the 240 strike. But how much did I get paid for that 240? Now, I got paid, as you can see here, $208 or $2.08 per share. So $208 per contract. I've got 3 contracts, therefore giving me $624, which again is a decent amount of income to bring in. And this shows how if you are assigned shares and there is a massive gap between your cost basis and where the current price is, you can sell covered calls below your cost basis. Now, a lot of people say that's not a great strategy, a risky strategy, early assignment, all of that different things, which I agree with. However, you can still make money inside this times. And that's why I'm showing this and doing this challenge for you guys, because I knew this was coming. it felt like this was coming sooner rather than later, but that's why I wanted to do that. So that is what's happening with Tesla. Again, the bulk of the $885 has come from Tesla. Now, if we head over to Meta, slightly different story here. So if we get up the trading view chart, Meta, what we did is, you guys remember, I still got this 155 put. So what I did with the 155 put is that I bought it back for 2.1K and I sold to open a brand new one at the same strike 7 days later for 2170. That nets out a debit of $20. So I didn't want to take assignment. So therefore I paid $20 just to get that debit in there. And now what we did is we had this second put that I had open at the 135 strike. And what I did is I think Meta closed. When did Meta close? Where's the low? Was at 132. So technically it was in the money at that point as well on the Friday when I rolled it. Is I didn't want to take assignment on that. Probably could have got some decent premium of accepting that and selling a covered call at the 135. But what I did was I bought it back for 104 because I think it was slightly out the money at that point. I think it was around the 135 mark when I decided to sell it. And then I sold to open a brand new put, one strike down, remember rolling down in strike and out in expiration, 135 to 134, 7 days extra, picked up $385, which netted me out at 281. Now, if we take into account the $20 debit, that gives us a net credit of the $261. And if we add in everything that happened there, that's where you get your 885. So in terms of where we are with this one, I feel like we are going to consolidate in this little range bit over here. We have earnings coming up. When is it? We also got Tesla earnings coming up as well soon. So we need to also factor that in. We've got there on the 26th of October. So we've got another week or so. It could do another leg lower. I think we have interest rates announcement, CPI coming out Thursday from memory. That could tempt the market even further here. So I'll probably look at when that is coming out and I might do my roll if it hovers around this down and out again before the interest rates announcements. But I've got a sneaky suspicion that the CPI, the inflation number might continue to go down, which again would be bullish for the market. So that's where we are. Again, the only main difference is I'm finally assigned some shares. So I do own 300 shares of Tesla at 280.50. Got 240 put out there, which is below my cost. And this one I'm continuing to manage, this 155. Ideally, if things work out, I want to reduce this to 152.50 potentially. And also using this put as some additional premium, as well as paying for any debits that I might take on Meta. But if the market tanks again, might have to take assignment on this 155 and start selling covered calls below my cost basis to keep generating that income, to keep the money flowing in. So overall, we are in a down market, but we are still making money. We are down as a portfolio overall, that in terms of money that I've got, because I have a unrealized loss on the Tesla shares, but I'm not interested in that at the moment. Yes, it's relevant, but at the same time, I'm still trying to produce the income every single week to put food on the table. So I really hope you enjoyed this video. Make sure you subscribe. There's some more videos on the screen now to learn about rolling and selling puts and options on below your cost basis. And I should see you guys in the next video.